Let's now invite Varun Lochab of HDFC Securities to talk a bit about where the market looks to be headed. Varun, hi, morning. Thanks very much for joining in. Your note makes mention of the fact that on an index level now, the upside seems limited, right? So the opportunity now lies in bottom-up stock picking. Even today there is a note from Morgan Stanley where they say that small caps perhaps are preferable to large caps because the growth momentum could look to sustain from here. So what exactly is the kind of market cap that you're looking to go hunting in? And is it more in the mid-cap end, or are you also looking aggressively at small caps now?
Yeah, hi, good morning. So actually, we are looking for ideas across all, market caps. And frankly, it's not that in large caps we are not finding any ideas. Even in, some of the nifty stocks and large caps are looking reasonable for the kind of growth upcycle, which should come through in FY23 and more in FY24 earnings. However, we see, more opportunities in some of the mid caps and even select small caps. But out there, obviously it's always more bottom up, and you have to be very confident on management quality and promoter quality and asset and their capital allocation over a period of time rather than just looking at earnings. But given the fact that we are positive on economy from a 12 to 18 month view, if you see mid and small caps are more exposed to to how the economy does. They are more economy-facing sort of stocks compared to large caps. So as things get better on the economic front, we believe mid and small caps will do well. And even in terms of valuations, we are seeing better sort of opportunities in select mid and small caps, compared to large caps. But there are opportunities all across. But at an index level, we don't see a runaway sort of opportunity given the fact that it's already trading at 21, 22 times.
All right, Varun, good morning and thanks for joining us. This is Pavitra. So you said that there are opportunities in the large cap space as well, and I'm seeing a lot of the financials find, their way into your portfolio. So you have something like an SBI, Axis Bank, ICICI Bank, a lot of these. Do you think that these are still attractive opportunities to get into?
Yes, so I think large banks is one space that we have been quite positive on in last 12 months, and we have kept increasing our weight. We still see good upsides as the credit growth is picking up and NPA cycle is completely behind, for these large banks, and they are well capitalized, especially ICICI. So ICICI, Axis, and SBI are our top picks within the banks. Similarly, some of the NBFCs also like Chola, we have been positive on. So financials is probably one of the best way to play, the economic growth uptick. Second is industrials and infrastructure. We recently released a detailed report on capex, how the upswing is looking quite sustainable from a 2 to 3 year point of view. So till now it was only government capex which was leading, but now we are, our bottom up work suggests that even the private sector capex will actually pick up and much more sharply than what the government capex, which is already strong, will grow at, but private sector will probably surprise on the positive. More in FY24 and 25, but so from that perspective, a lot of these industrial names, Cummins, Siemens, we are positive on. Some of the other infrastructure names we are positive on, like KNR, GR Infra, NCC. So there is a whole host of sectors which are looking promising. While stocks have run up ahead of those earnings, it's not that capex upcycle is not being discounted, but we are still able to find some opportunities when we are taking a 12 to 18 month view.
Varun, the big macro story now which is unfolding is that the global markets are likely to, global economies, the developed ones are likely to go into recession if they're not already in. And it could be a deep one given the way the energy crisis is unfolding, particularly in the Eurozone. There are blackouts, factories may need to shut down production because there is not enough gas to keep them running, or the gas prices are too high. So in terms of the impact on the Indian companies, if the US markets and the European markets get into a deep recession, apart from IT, is there any other sector where we have a direct correlation or an indirect correlation which you'll stay away from?
Frankly, not too much beyond IT. Pharma is also there to a limited extent, but we don't think that will see that sharp impact. But if you look at barring IT, actually mild recession would work in India's favor, given the fact that some of the commodity inflation, which seems to have peaked out, should remain benign over next 6 to 9 months if some of the big developed economies remain under pressure from a growth perspective. So a mild recession may be a good news for Indian economy, but a deeper recession will probably put some pressure on indirectly through lower exports, which will result in higher CAD probably because the domestic demand is good. So you might still see imports being strong. So a higher CAD will probably put a bit more pressure on currency. So it will, which can push up domestic interest rates later on with a lag. So there would be indirect impact more on macroeconomy rather than the sectors per se. In terms of sectors, I think it's largely IT and to an extent pharma which gets impacted, and maybe a little bit of chemicals if there is a serious disruption in Europe, which would be a short-term supply disruption. And I think medium-term Indian chemical sector stands to gain.
Okay. Varun, you think domestically this fear of inflation, could it, dampen the festive season, or do you think that revenge spending is still, at least for now, going strong?
I think if I look at domestic consumption trends, they are looking strong, especially on the urban consumption side. We are not seeing any impact of higher inflation denting consumer sentiment. Obviously, rural consumption has been a bit muted and soft for some time, and that out there we are still not fully convinced on the pickup. But urban consumption, I think India has seen this level of inflation for a long period of time. So in terms of delta in inflation, it's not been a severe one for India, and wage inflation has also been strong in the last 6 to 9 months across sectors. So I think urban consumption and sentiment around the festive season looks fairly strong, and even our channel checks across multiple sectors is suggesting that it should be a good festive season.
All right, Varun, we'll leave it at that today. Thank you very much for joining us and taking us through your outlook on the market. With that, we're going to get into a short break now. But on the other side, we will speak with the management of the Brigade Group, Nirupa Shankar, to discuss the on-ground demand picture for the company. Stay tuned for that.